Good evening, everybody, and welcome to another live stream by the Option School, where we talk about option trading strategies, and option trading adjustments. This is your friend Pradeep Singla, and today, since it's Wednesday, so we said, okay, let us again do Nifty expiry analysis, which is for 18th Feb expiry, tomorrow's expiry. And after analyzing the expiry, I would also like to give you a brief about how generally the expiries are traded, what most of the traders are doing in these expiries. So we'll discuss that also, right? Hopefully my voice is audible. Thanks, Mr. Rajiv Agarwal, for confirming that my voice is audible. Let's start. Sorry, my throat is not that great, so we may have a little bit of this cough in between. So kindly bear with me. All of you who are new to channel, please go ahead and click on that subscribe button. While doing that, please click on that bell icon also, so that whenever we are doing a live stream, you get an instant notification. And most of the working days, we do live stream at 9 p.m. And all of you who are already part of our big family, you know which button to click. Even before we start the video, you need to click that like button so that we can start the video, right? Okay, thanks for all of you who have already done that. And thanks, Mr. JP, for confirming that it's audible. Okay, let's see what happened in markets today. There are a lot of things going on in the market, whether from now onwards, markets, Nifty or Bank Nifty, whether it will change track and now start falling only, or whether it's just a healthy correction and markets will resume their bullishness, and all those kind of things. Most of the people who do a lot of technical analysis and predictions, they started saying. So every time market makes a move in any direction, you will find a lot of analysts coming up with their own theories. But what I have observed, only one theory works, and that theory is that nobody knows where the market will go, right? So most of the analysts like me, they will keep on saying some things, and then ultimately whatever happens to the market, so they will always be right. So I don't believe in any kind of predictions. Nobody knows whether from now onwards market will be bearish only, or this trend of bullishness will continue, because there are so many factors which nobody can even include in its analysis. So we have to go as the day comes. We have to keep on fighting with the markets and keep on making some strategies wherein you can have some uh, positive revenue. So today, if we see markets opened at a lower level from yesterday, it was small, but then yes, during the day, if you see here, it made a good bottom 15,170 and high of 15,314. So high and low not having much of a difference, not even 200 points. So by any terms, I will not say it was a very volatile market. A market which has a high and low of roughly around 144 points cannot be termed as a very volatile market, but only because we are very much used to see bullishness in the market. Any kind of a fall which is more than 70-80 points, uh, everybody starts thinking that okay, it's a very volatile market. But nothing much volatile about the markets, and it made a low of 15,170. From there, little bit of recovery, but ultimately, if you see market closing very close to their lower levels, so 15,208. If you see open and close, hardly a gap of 70 points. So not very volatile, but yes, definitely not going all time high every day. So at least there is a kind of a stop to what happens for these kind of markets which are almost every day making all time high. So then whenever you find a day when markets is not moving high, but rather giving a kind of a relief for all short call sellers, that is treated as a good day. So today also, I think for most of the option sellers, it must have been a good day, because even the markets falling, implied volatility has not gone up. So good amount of decay has happened in most of the options, giving lot of relief to most of the people, right? So I'll say a normal, good, regular day. Markets in this week has not gone too far in any one direction, which is good thing. But now all these kind of small moves. So generally, what we see on non-expiry days, markets move violently, and on expiry days, markets are very dull. So will that continue tomorrow also, or uh, will tomorrow's expiry will be volatile? That is anybody's guess. Let us analyze option chain and find out what are the different possible levels of the market and what can be the extreme points in the market, and then we will have a short conversation on how to trade these expiries, right? So okay, this is option chain. Where is market? Market is 15,208. So 15,200 is kind of a at the money straddle, right? So again, if we go by our 4 points, I call it a 4 point check that okay, what are the expiry levels we find? So if you see 15,200, what is the straddle premium? Straddle premium is 55 rupees 50 paisa on call side, 63 rupees on put side. So 55 plus 60 318, right? So 118 upside and 118 downside, which makes it 15,200 plus 118, 15,318 or so. And on downside, it will be some close to 15,000, uh, 15,082. Just 15,100 and 15,300. These are the two levels which traders are thinking that okay, these are the extreme level. That is why they have kept this kind of a premium, right? Again, I'm saying this is not something sacrosanct that okay, it will always be like that, because even a lot of traders can go wrong. This is based on whatever is this data showing as of now. This data is showing that okay, a lot of traders think that okay, market may not go above 15,318 or so, or it may not go below 15,080 or 15,100. So these are the two levels, because that is why what they have done, they have kept their positions open. So at any price, if you keep your position open, that means you are expecting that kind of a move. This is the basic assumption behind this kind of analysis. So 15.3, 15.1 is the straddle premium indicating. And second analysis, if you do, what about the highest open interest? We have very interesting highest open interest here. 15,300 is highest open interest. 15,200 is not very far away, but yes, because only 6 rupees is there, so we may not treat it as very important, but yes, very high open interest. Even 15,500 is pretty high, which might have been used for doing a lot of hedging, because 3 rupees premium, you generally don't tend to sell these kind of markets for 2 3 rupees, because uh, strike is really close, and you would not like to take unnecessary risk for 2 3 rupees, right? So 15,300 is highest open interest on call side if we see. And on put side, it's pretty far away, 15,000. So 15,000 and 15,300 are the two extreme points, and your highest open and your straddle premium is almost landing in between. And if you see, very interesting, 15,300 is exactly priced at 18 rupees, and straddle premium also says 118 rupees. So definitely there is some efficiency going in the market. So maybe 15,318, 15,320 is the level to watch if market opens at these levels, and if there is nothing news driven in the markets. So chances are 15,318, 15,320, 325 should be the uppermost level. And as soon as you get this level or markets closer to this level, maybe at 15,300, you can definitely decide that okay, let me take a chance, and maybe let me sell a 15,500 call of next week, which will be having a very good premium, right? And similarly on downside, as soon as market goes towards 15,100, 15,000 is absolute bottom. We do not expect this market to go below 15,000. But again, if it goes towards 15,080, 15,090, then also that can be a good opportunity to do some bullish trades. A simple bullish trade can be selling a 14,700, 14,800 kind of a put for next week, which is 25th Feb, right? So these two extremes can be used, that okay, if market is moving towards 15,000, create some bullish trades. If market goes towards 15,320, 325, at that time we can create a bearish trade. So these two analyses definitely fix that okay, this is the range. So if I try to find out what can be the level of expiry, whether market is right now towards its expiry or not. So if I say highest open interest gives me a level 15,300, this is again very statistical. So 15,000 and 15,000 on put side, 15,300 on call side, which gives me an average of 15,150, right? Which gives me an average of 15,150. Max pain is also around 15,200. If I take an average of highest change in open interest also, so if you see highest change in open interest is on 15,300. Again, let me remind you, this data can definitely change based on what happens, what traders do tomorrow, and highest change in open interest on, oh, that these are same. On put side is again 15,000. So if you take average of highest change in open interest, it is also indicating 15,150. Highest open interest, it is also indicating 15,150. So with this data, if this data do not drastically change, then 15,150 plus minus 30 40 points is the level we should be looking for. Right now market is at 15,208. If I have similar pattern at 10 o'clock, I would like to play this market for maybe 15,150. That would mean maybe I can create a 15,150 baby butterfly and see that okay, market can make a dash towards 15,150. But again, obviously there are a lot of trades in the market, so this data can keep on changing also, right? So this is the third thing. So we have fixed upper and lower levels. What are the levels we can expect? And based on this data, we are expecting the expiry to be 15,150. And fourth thing is we always try to see where is the highest congestion as of now. Now all these three, four things we need to see at 10 a.m., at 11 a.m., at 12 p.m., that whether they are changing or not. If they are changing, obviously the expectations, the levels from the market will also keep on changing. So if I see the congestion, where is the highest congestion? If you see 15,300, call side is 67,000 and put side is, let us say, 22. 67 plus 22 is 89, right? If I see 15,200, that is roughly 36 and 37. So just this comes around 73. 15,300 is 89. What about 15,100 is 7,000 and 28,000, which is hardly 35. So if we see the highest congestion is definitely on 15,300, we need to see whether this 15,300 highest congestion does it sustain at different hours of the market. So at 11, at 12, whether we are seeing the similar kind of a congestion. If we see that okay, no, the more congestion is towards 15,200, even if then at that time market is at 15,250 or 260, but congestion is at 15,200, because you expect a lot of option writing happening if market opens at around 15,200. So 15,200 congestion will increase like anything. As of now, 35,821 on call side and 37,630 on put side. That means most of the traders are, it's a tug of war at 15,200. The call sellers, you can say, and the put sellers or buyers, they are almost at the same number. So as of now, it's undecided whether market is going lower than 15,200 or whether market is substantially going higher from 15,200. So based on that, there will be a lot of put writing and there will be a lot of call writing happening at these two levels, and that will change what? That will change the congestion zone. As of now, as I am claiming, the congestion is at 15,300, so market should expire towards 15,300. But based on tomorrow's action, obviously this congestion will change. Maybe 15,200 will become very high congestion zone. So then we can say market will expire 20 30 points plus and minus from 15,200. Or if 15,100 becomes a congestion zone, then market definitely will expire towards 15,100, right? So that is how every hour these things can keep on changing. It's not that okay, whatever we are discussing at the end of the day today, that is very hard and fast. You see, during the day also there can be certain development that okay, traders, whatever they are thinking, it can be totally different. It changes, and then accordingly the levels of the market change. But generally what we have seen at least 80 to 90% of time these levels do not go haywire unless and until a monthly expiry or there is some event. So this is not a monthly expiry, this is a weekly expiry. So definitely 15,080, 15,320, these are the two extreme levels to be observed. I do not know, there may be many technical analysts who are talking about resistance and support, and so we find all our resistance and support from this option chain analysis only, right? So based on that, it seems to be this is the level it will stick to. And then if you take average of change in open interest and highest open interest 15,150 to 15,200. If you see congestion zone, it's rocking out 15,300. So at 10 a.m. in the morning, we need to again analyze that, okay, now what is the what is the trading activity indicating that market is going towards 15,150 level or towards 250 300 levels, right? Now if this is the information we are having, how you should trade and how generally people trade on expiry, let me explain that very quickly, because I do not want to make this video a very long video, difficult to speak for lengthy time, but I will just quickly explain that how generally traders trade this. I am not recommending this kind of a trade, but yes, people who want to know that, okay, how expiry trades can be done, this can be one of the methods. And just give me 5 seconds break to have some water. And meanwhile, all of you who have still not clicked on the like button, you have a good opportunity to click on the like button. And if you are seeing it on mobile, what you can do is you can close the chat window, click on the like button, and come back to the chat. Just give me 5 seconds time. Okay. Thanks for few more likes. So nice of you. 14,800 put buy this month and 15,300 put sell next month. So how does it make, so if market goes to 14,800, how will you make profit, right? So 500 points put spread may not be a great trade at this stage, Mr. Abhishek. SGX Nifty down 138 points, now at 15,191. Okay. I think few minutes back I checked, it was very flat. Maybe something has changed in the market. Stop looking at SGX Nifty, Mr. Ghosh says. It's never closed. It's very true. So most of the time it is used as a distractor, but I would not be surprised if markets open. You see, 15,191 is 15,208 is our level, and I don't think that much of premium is there in the uh, future. That, okay, SGX Nifty 138 point down and still it is showing 15,191, Mr. JP. I think we need to recheck that, right? Uh, Nifty closed at around 15,200 today, right? So if from 15,200, if 138 point down, it should be 15,050 or 60, right? So maybe something not right there. So let's see that, right? Okay, now how generally some of the traders do, and again here the assumption is that you are having lot of money to trade, and based on that you do both call selling and put selling, right? So if I see one of there can be different methods. One of the safest method is, I know that highest open interest is at 15,300, and I am assuming here that, okay, the same levels market open tomorrow morning also, and whatever you are selling tomorrow, obviously it has to be in MIS, right? It has to be in MIS so that you consume less of the margin rather than doing it in CNC, wherein the margin requirement will be high. So what generally traders do, they will sell both the highest open interest. I'm talking about conservative traders. So if you sell both the highest open interest, you are getting 18 rupees here on this side, and if you sell highest open interest here, you're getting 11 to 12 rupees on put side. So what you have done is you have collected around 30 rupees from the market. Since it's an expiry day, if market keeps on fluctuating between these two levels, you will find that every 1 hour this 30 rupees becoming 25 rupees, 20 rupees, 15 rupees, and ultimately becoming almost zero, right? So that is one level. Now, but because markets can be volatile also, one of the ways is to protect this position by putting a stop loss of maybe 35 rupees. What we have done, we have collected 30 rupees from the market. Maybe you can put a stop loss of 28 rupees on both the sides. What will happen if market really tanks down? This 15,000 put gets scared off at 28 rupees. Maybe by that time your 15,300 call will also become 1 or 2 rupees. So ultimately you do not lose at least. So this is a defensive mechanism that, okay, what I do, I sell highest open interest on call side, I sell highest open interest on put side, and I put a stop loss of whatever total I have received, so that at one of the sides, even if I have to repay the total, it's pretty much okay with me. On the other side, I have recovered that. That is one part. Second part is the stop loss may not hit. Market is very, very dull. So I have sold a pair at 30 rupees, maybe it has gone to 25 rupees, and then I can keep my stop loss also changing. I can make the stop loss 25, maybe the total goes to 20, I can change the stop loss to 20. Then I'm 100% sure that, okay, I'm going to make some money from the market. And then if market makes a dip, little bit of dip towards, let us say, 15,150 or 15,100, you can also keep on trailing your call from 15,300. You can shift it to 15,250. From 15,250 you can shift it to 15,200 also. So you can shrink the trade. Luckily, just one day before the market, you are getting a 300 points between two highest open interest. So you can ultimately complete this gap and try to pick up more premium. Once you have picked up more premium, that gives you a more range of the market to play with, right? But then it can be stressful also. Many of the traders, what they do, that, okay, if my call is if my put is losing some money, maybe I will compensate it by make it a sort of a delta neutral by selling extra call. So sometimes it happens that, okay, the put sold is 1, the call sold are 2, 3, 4, and then suddenly market reverses. So you should be very sharp enough that, okay, to convert call back into put. So it definitely is a stressful method of taking the trades, but still this is one of the possible methods. Another thing is that, even after taking all these precautions of stop loss, etc., etc., suppose the stop loss doesn't hit and market goes to 14,950, then your 15,000 put will become worth 50 rupees. You have collected 30, 40 rupees by doing little bit of jugglery on the call side. Still you are into 10 rupees loss. So what you can do is that, okay, scare off this position and maybe sell 14,500 or 14,400 kind of a put off next week, so that ultimately you're not losing any money in the trade. But yes, you have a lot of scope. Once you have collected 30 rupees at 300 points difference, that means still 14,970 and still 15,330. These are the two ranges you are not going to lose if you have that kind of a patience. And every hour there will definitely be a decay, giving you some opportunities to book profits. And even after doing all these things, market goes haywire in any direction, you can always see that, okay, even market goes to 15,400, you're losing 70 rupees in the overall trade. You can always shift the trade, roll over the trade to other other week or other month also. That is one way of trading. And but then only thing is, you should need to have that kind of a temperament that, okay, I do not feel scary, because market will definitely test your temperament on both the sides, on upside also and on the downside also. Another method is, again, for aggressive traders. What they do, they sell this 15,200 straddle itself. Suppose market opens tomorrow at similar levels, because again, SGX Nifty is very flat as of now. So what you have done, you have again collected 118 rupees. You have collected 118 rupees, and on both the things, on 15,200 put as well as on 15,200 call, what you can do is you can put a stop loss of maybe 120, right? If one thing becomes 120, other thing definitely will become much less. So chances of loss will be very negligible. And obviously, you see, in these kind of trades, you can always expect that, okay, there can be 5-6 rupees loss also if things do not go the way you want. But if market sticks to 50,250 to 150 kind of a range, what you will find every hour, maybe 15 to 20 rupees. So there are 6 hours, right? Within those 6 hours, this 118 need to melt if market is expiring between 15,150 to 250. So every hour, you can say 15 to 16 rupees will keep on melting. So it is quite possible that you have done this trade at 9:30, and at 11 you are able to book some of the lots, right? If market has gone down, maybe you can make it inverted also. You can have a stop loss also. If one of the trade gets stuck up, you can always roll over the trade. But generally, if you see, you end up making decent amount of money from these kind of straddles also. If you see now also, So today market has gone down. So 108 rupees has gone in this call. Only 26 rupees are added in this put. So somebody who has done a 15,200 straddle even yesterday has made huge amount of money. But you can always ask me why anybody will do a 15,200 straddle when market yesterday was at around 15,300. So even if somebody has done a 15,300 straddle yesterday, Tuesday closing, he would have earned money, right? 78 rupees he might have got from call side, and on put side he's giving back 55 rupees. So still he ended up making 23 rupees. So as a precaution, people do make multiple straddles. So if market is at 50,300 on Tuesday, sorry, so 15.3, 15.2 and 15.4, all three straddles are done. So in this case, if you see 15.4 straddle lost 50 rupees, 15.3 straddle, although market is volatile today, 100 points going down from the yesterday's closing. On 15.3, we are making around, let's say, 25 rupees. So net 25 loss, but on 15.2, we are making 75 rupees. So net you still made 100 rupees profit from three straddles in just one day, which is not less, right? Which is not less, which is a good amount of profit. Similarly, the amount of decay tomorrow will be pretty high. But if you're a trader who know that, okay, how I can roll over my position in case I get stuck up, and your position size is not very high, if your position size is not very high, then definitely you can take these kind of trades. You see, it many times people ask me, can I do this trade? Can I do? For everybody, trading is different. Some people can hold on to a lot of temptation. Some people can uh, take care of any kind of a trade with the kind of adjustments they have, the kind of rollovers they have. But others are not able to do that, and little bit of M2M, a small negative M2M makes them scary and they run away from the trade. So it depends on person to person, his psychology, his capital, whether you are comfortable selling five calls against one put to recover whatever is the loss, right? Whether you're comfortable that, okay, I can sit whole day in front of the screen, and whether you're comfortable that, okay, I cannot sit in front of the screen but I want some positional trades. So trading is something which is different for different people. So whatever suits your temperament, whatever suits your style, you should follow only that. Do not get unnecessarily convinced or confused by what others are doing. It's a very personal matter, and you have to decide your own style, that, okay, what is that style which gives me comfort level in the market. If I'm always discomfortable in doing whatever trades I'm doing, it doesn't make any sense even if you're making money, right? That discomfort will definitely take away a lot of money once in a while. So you should be comfortable doing the trade, and you should have a clear plan that, okay, if this happens, what I will do, if that happens, what I will do, and in case any trade goes wrong, how can I manage that trade. So any trade you choose, whether it's expiry trade, whether it's a non-expiry trade, you yourself should be comfortable, and then only you can decide that, okay, is this trade good for you or is this trade bad for you, right? Likes, please, folks. So Mr. Ghosh is making an appeal. So let us listen to Mr. Ghosh and let's have few more likes. We have a lot of scope still. What Mr. Rias is saying, markets will not go down drastically because FI is continuously buying. We'll never allow market go down immediately. When FI starts selling, we need to be cautious. You see, all these things everybody can read that, okay, FIs today purchased and DIs were slightly selling more, maybe 100 crores more, but that also doesn't justify a 100 points fall in the market, right? So these things can be sometimes very deceptive also. You can have many days when FI is buying and market still going down, or FI is selling and market still going up. It's not that, okay, FIs and DIs trade only in index. We are talking about index. So it's not very difficult to manage these index, especially the index of bank nifty, where two three stocks are having almost 70% of the control, right? So these things can be deceptive, but these things can sometimes give you some clues also, right? V-shaped recovery can be dangerous if you don't act fast, definitely. So when you are trading on expiry days, it's always better to put some stop losses based on someone else's. As I said, okay, if I picked up 30 rupees, let me put a stop loss of 28 rupees. And as soon as one of the position hits stop loss, I must be quick enough to cover the other position also, because in case a reversal, it should not happen that other side also get scared off in 30 rupees. So those things you should be mentally prepared to do, right? Do not take it very casually, because unnecessarily a lot of people will make money, but the amount of money people will make will be exactly similar to the amount of money people will lose. So we do not want to be on the other side of the table, right? We can quickly become W also. Yes, all these things definitely become important. What Mr. Marx is saying, sell the ATM, straddle at open, exit at 1 p.m. Depends. If till 1 p.m. there are no movements, I'll say if you're able to sell a good straddle at 120, 130 rupees and market do not move much in next 2 3 hours, you are good for 30 40 rupees gain. So why to wait even till 8 p.m.? Mr. Ria says this month I am profit of 4% of my capital through non-directional. I'll never worry wherever the market go. I will always go for iron condor in stocks and Nifty. That's a fantastic thing. If you're able to control those temptations, wonderful, Mr. Riaz. Uh, Fin Nifty is very easy to manage. Okay, I would not be the right person to comment because I've not traded even a single trade in Fin Nifty. I have not even analyzed that. So to some extent, I trade some Bank Nifty, but Fin Nifty so far not done anything. What Mr. Rajkumar says, nowadays we can see some Mr. in India, the markets, what is this? They are more stronger than FI or DI. I really don't know what is that, Mr. India. Are you talking about retail traders, Mr. Putra? So, if there is something significant, please explain it in detail so that all of us can learn from what we're trying to say. Right. So mostly these are the lines on which, if you want to do expiry trades, otherwise one of the another method is that okay, watch these levels whenever you feel market is around 15,320. I prefer that I sell some calls of 25th Feb, and whenever market goes towards 15,100, maybe I will be adding some puts of 14,600, keeping a space. So even if I need to carry forward those trades for next day or next week, I'm pretty much okay with those trades rather than trying to extract all the money tomorrow. And many times, what I've seen, those trades also giving you healthy profits as long as we are able to maintain a right position size, right? So if I have, let us say, 10 lakh rupees for this, I should not go beyond 4433 lots. If I have like 50 lakhs, definitely I can try a higher number of lots, but it all boils down to your money management also, right? So two workshops we have planned totally in a different module this time in the month of March. We are not going by a 2 days workshop. We are not going by a single strategy workshop. What we have done is we have planned a 13th March workshop, iron condor, iron butterfly, short strangle, and covered call. Straightway, we'll be talking about these four strategies and all the quadrants of these four strategies, how to adjust, what are back testing experiences, and how you can create some trades in these four strategies, right? So this is happening on 13th March. uh, Again, 27th March we have taken another workshop. These are the two workshops which we are doing in the month of March. So we'll be talking about vertical spreads, their adjustments and their trades and their back testing. So basically it means bull call spreads and bear put spreads plus combo 2 plus toss. So this workshop on 27th March will cover both the topics of combo 2 and toss, and it will cover vertical spreads and their adjustments and their setting procedures. So again, a full day workshop, and 13th March will cover four very practical, very important strategies which almost all the traders must know. And as I think Mr. Riaz was saying, iron condor and all these strategies work really well if you are a very conservative trader having rational expectations from the market, right? So these are the things we will be uh, doing in the month of March. And what Mr. Thomre is saying, can you trade for me, sir? I have 20 lakh of capital. Why should I trade for you, Mr. Thomre? Even if you have 22 crores of capital, you need to take care of your money. Why should I trade, right? And Mr. Riyaz says, after I attend your class, I'm making every month 4%. Last year, I made 50% of my capital only in iron condor and spreads. Thanks a lot. That's really great. You see, uh, most of us learn these strategies, but somebody like Mr. Riyaz, the way you are executing these strategies, that makes a lot of sense. So these are the kind of experiences we want to share in these kind of workshops with all of you. So anybody willing to enroll can send a message to WhatsApp for more message to this number. You can WhatsApp, you can call us during office hours, and in case you need any more further information, The number is displayed on the screen: 958-285-3463. Okay, you want to participate in live chat, you can become a gold member. Want to have your views, our views on your trades, you can become diamond member. Want to see some of our trades, you can become smart hedge members. And for super smart hedge members, we are now starting another thing. We have been picking up some stocks which are in cash. Quantity can be anything, it can be as low as 5,000 rupees also. And so far we have seen that our track record is almost 99%, right? So we will be sharing those information also, that like in last 1 week we have picked up three stocks, and we are able to book more than 3-4% profit in these three. So even in last 2-3 days also, even today we booked profit in the short, although market has gone down. So whatever cash stocks we are picking up, it can be one stock in a week, it can be five stocks in a week, it can be one stock in a month. That also we will be sharing only for super smart hedge members. Not that you need to just copy paste it, maybe you can observe. If things work, you can go ahead and use in your trading. So this additional feature, in addition to whatever discount they get in single strategy workshops, will be there for only super smart hedge members. Anybody willing to join, you can join by clicking this join button, or there's a link given in the description also, right? And so any other information you want, Mr. Mehta, fees, etc., everything, you can talk to us on these numbers, or you can send a message. You will get an immediate reply. You can write to us at info at the rate the option school also. Hopefully you liked whatever analysis we did, and thanks for all the likes. If you are still there and not liked, please go ahead and click on the like button. That really encourages us to come every day. Share this video to somebody whom you think it will be useful. Write your comments, suggestions, questions, advice, feedback, anything you want to write, please write it in the comment section. We will be more than happy to answer that. And if you have still not subscribed to the channel and you're still doing trading in markets, at least in options, it makes sense to subscribe to this channel, so that we are discussing a lot of options trading ideas in this channel. So go ahead and subscribe the channel, right? SSH stocks suggestion, will it be intraday? No, not at all, Mr. JP. In fact, one day I would love to share that method with all super smart hedge members also. It's not intraday, although it has given returns intraday also. Like we picked up one stock, it was in 28 rupees, and next day we are able to sell in 32 rupees. We picked up another stock which was Jindal Steel in 310 rupees. Yesterday we were able to sell it in 330 rupees. It's basically our choice, but the recommendation still, I'll say, the choice of the stock, I would not say recommendation, the choice of the stock still lies that okay, this stock can go further up. So but we are not staking a lot of money on that. We are basically first opportunity to book profit, we are booking profit, right? But anybody who wants to stay longer in these stocks can definitely observe that okay, what is happening, and then accordingly you can, because everybody has its own analysis also, right? It's purely based on a pattern which we have identified, and this pattern has worked in last so many years. And now when markets are at all time high, even now that pattern is working. So the same thing which we are doing, and on daily basis, I'll tell you, we have almost 13 to 14 choices. Out of that, maybe we choose one or two as of now, but sometimes for the whole month, you do not get anything. So, not that okay, every time we'll get these kind of picks, but definitely we are getting a lot of picks nowadays with that one single method. Hopefully, it continues to work, right? Since delivery is T plus 2, can we sell in T plus 1? You can do that. Even if the delivery is T plus 2, you can sell it in T plus 1. Most of the brokers allow you to do that. And the settlement takes care, because they do settlement on the same day. So ultimately there is no penalty, because most of the stocks what we pick up are very liquid stocks. So it doesn't happen that okay, there is something that okay, the delivery is not there. In those cases there can be problem, but 99%, 99.5%, which is what my broker says, these things work. That okay, whatever you have purchased, that is what you call BTST. These things work. I think one of our friends, Mr. Gunjan, is an expert in that. If anybody has any difficulty, we can have a session from Mr. Gunjan on how to do BTST. Right? SSH discount applicable in one day workshops? No, SSH discount will not be applicable in This is a single strategy workshop. It is applicable on one day workshop. Is a complete workshop where we are covering four strategies on first one day, almost six strategies on second one day. So there will be no SSH discount, Mr. Sarkar. Uh, what Mr. Akshay says, please do not recommend stock, etc., unless you have the SEBI. We are not recommending any stock. Whatever stock we are buying, we are showing you that, right? And we are not saying that, okay, go ahead and buy this stock. Not at all. You just observe that. Just for learning purpose, it is there. We are not saying that go ahead and buy this stock. We will never do that, right? And thanks to all of you. So tomorrow again expiry. Take care of your expiry trades. In case you get stuck up in any of the trade, just do not throw your towel in desperation. You see, one of the best tools always available is that, okay, you can always shift the trade to next week or even to next month if it is really in deep trouble. So hope all of you make a decent profit in whatever expiry trades you do. Although I will say, uh, it's not necessary that, okay, you should do any kind of expiry trades. Even if you're not doing any kind of expiry trade, you see what happens sometimes that the first time you're doing an expiry trade and that day also the market has become very volatile, right? So then it doesn't make any sense, and then you always feel bad about that, those expiry trades. So I'll say, if you're not doing expiry trades, you're not missing anything. Don't worry about anything, just observe, right? If you are used to doing expiry trades, I have given you certain ideas that, okay, use uh, good stop losses, and you should be very active. Expiry trades and then doing it passively doesn't make any sense, right? You should be doing it very actively only, right? So thanks to all of you for being there, and wish you all the best for your trades tomorrow. Good night, and see you all tomorrow, most probably at the same time. Thanks and good night.